this quickly, but it has. And a lot has happened in our world, as we all know, so we'll get a chance to talk about the issues and how things will impact us in 2017. And the plan for the call is we'll do our updates with Matthew about what's happening both on the Hill with the budget and a tiny bit about the administration. And then we'll have our guest, Gene Spencer, who I'm sure many of you know from Home Ownership Preservation Foundation, as well as a long career with Fannie Mae and working with public policy issues in housing. And talking about kind of what we might think about given what little we know so far about what's happened to the administration and on the Hill. We circulated a paper he's written that's a working draft on some of the policy issues, things that we've discussed some already, and I think it's also a good frame for the tasks at hand. And then at the last quarter of the call, we're going to talk a little bit about rural housing issues. I just shot an email out with a sign up for people if they're interested in working on rural housing issues. If you're working in the field there already, we think that for housing counseling this may create some opportunities and help us deliver an underserved population that was not getting as much recognition but might be able to create some opportunities there, and so we want to get that thinking going. And then, of course, a plug to join NHRC at the very end. Though we've had a good year of membership, really appreciate everybody who's stepped up already. And plan to put us in your 2017 budget if you haven't already, so that you can get us in next year. Okay, with that note, let's dive in. So Matthew, so why don't you give us the latest on what's happening with the budget and what's happening on the Hill?
Yeah, so just a couple of quick updates. Not a lot has changed since we last spoke, but as far as federal funding, so we are December 1, so next week the current continuing resolution will expire, so that gives them just about a week to do something else to continue funding the government. The widespread expectation is that there will be a new continuing resolution that will go through March to allow the new administration to kind of weigh in, the new Congress to weigh in and kind of put their fingerprints on the continuing resolution. One, I'm not sure if we discussed this last time, but one important thing to flag is that Congressman Hale Rogers, who's from Eastern Kentucky, has been the chairman of the overall House Appropriations Committee. He's stepping down as the chairman, and it's widely expected that Congressman Rodney Frelinghuysen, who's from northern New Jersey, will be the new House Appropriations chairman. That's worth mentioning because, as folks I'm sure remember, the House had passed $55 million for HUD housing counseling assistance, which is an increase from $47 million in the current budget. And that had largely been because Congressman Rogers had been supportive, and they recognized that eliminating NFMC was going to leave a substantial gap in federal funding for housing counseling activities, and so they had plussed up the HUD housing counseling number to $55 million. So with Chairman Rogers stepping down, we kind of have to start from scratch in terms of persuading the House again to that it's necessary to increase funding for HUD housing counseling assistance in light of eliminating funding for NFMC. So we are working on trying to get a meeting with Congressman Frelinghuysen. Folks out there who are in New Jersey and particularly in his district, it'd be very helpful to hear from you if you have connections with his office. We're very interested in trying to put together a meeting with him and some local counseling agencies, and make sure that he recognizes the value of counseling, and it's something that we hopefully can make a priority for him. It's also unclear. There's going to be just a general kind of shake-up with the various subcommittee chairmanships. It may be that Congressman Diaz-Balart continues to be chair of the THUD subcommittee, but that's not a certainty. So I think that's all we have for federal funding. So likely there'll be a CR to go through March, almost certainly. Bruce, do you want to add anything on funding?
Yeah, I mean, I think that I think you said it well. I think the one thing to really keep in mind is the importance of us talking to Republicans in the Appropriations Committee, even if they're not necessarily on THUD. We don't know how much it'll shake up in the next upcoming Congress, but to the extent that we can, and you know, Matthew's been focused on this and has reached out to a number of groups locally to try to get requests for meetings in the field. We had huge success with this over the last 2 years, and really need to expand this now. I mean, it is a problem because Hal Rogers was one of our champions, and I think had high ownership over the $55 billion figure. The reason for the CR extension, excuse me, through March is so that the new administration can put their stamp on the budget. You know, so it's important for us to kind of carve out our territory, so to speak, both in the House and Senate. So please, if Matthew reaches out to you, please please respond right away, and if you have some leads, please definitely reach out to Matthew about them as well. We're very, very conscious this is a pretty important time.
All right. And so just the other thing to mention is folks have probably heard this, but the name of Dr. Ben Carson, and I think Jean and Bruce will discuss this, so I'll just kind of quickly touch on it. But Dr. Ben Carson has been widely rumored to be Trump's nominee for HUD secretary. It was reported on Monday that he would accept the nomination, and you know, that he would be the HUD secretary elect, I suppose. But that wasn't confirmed, and so it's not official yet. It does seem like it's very, very likely, but there hasn't been any official word either from the administration or from Dr. Carson. I didn't put a quote up there just to kind of give folks, I think folks, I mean, we really don't know what to expect from Dr. Carson, what we would expect from him as HUD secretary. He really doesn't have a background in housing. And again, I think Bruce and Jean will touch on this, but I think the quote on the screen kind of gives you some perspective. I think folks probably heard that he had been critical of the Obama administration kind of reinvigorating the affirmatively furthering fair housing provision. So that's just, you know, what little we do know about him with respect to housing. Bruce, do you want to add anything there? Or?
I think that's it.
All right, and just by way of a question, so Elliot Pepper had asked whether HUD will be issuing an RFP if NFMC is part of the continuing resolution. I think, Bruce, I think you know the nuts and bolts of this a little better than I do. I mean, my understanding is that NFMC would be funded through the CR unless they made, you know, they theoretically could make a tweak to cut it out, but they generally don't do that. But I don't know that that means that they would actually be getting that money out the door through an RFP. Is that correct, Bruce, or do you want to add anything on that?
Okay, so first, just so we're clear, NFMC would be NeighborWorks, and the funding would be HUD housing counseling funding that would come through HUD. I haven't heard about what they're doing about the current year cycle, but it's a good question. We should probably just ask the appropriate questions there. Usually by now they're working on the RFP for HUD housing counseling. I think that on NFMC, I mean, it always depends on what the final budget will be, and given that it was zeroed out in the final budget, it's not likely that we will see NFMC funding occur unless they do a full year CR, and I don't think there's any expectation that that's a likelihood to play out. So I don't think, sadly, I don't think we can think that NFMC is going to be likely to be funded in this process. So hopefully that answers all the bad news.
Right, and I mean, there will be, in theory, there's, funding from October 1 through March 31. It's just unclear, what happens to those dollars if they actually make it out the door and to counseling agencies.
Okay, so let's move on to our guest, and let's talk a little bit about what the opportunities and challenges are for the upcoming administration. So we have Gene Spencer, who's been deeply involved.
Bruce, I'm sorry, I'm going to interrupt you, but we've lost Gene as far as the audio. I think we just need Gene to enter his audio pin. So Gene, if you can hear us, hopefully, you just need to hit #133#. But I don't know if we want to give him a second to get on and maybe go.
Okay, that's good. And it might be that you have to go pound.
Oh, I'm sorry. I think we have Gene back.
I'm back.
Gene,
Sorry. Okay. Yeah, I got dropped for a second there.
Oh, good. Okay.
So I missed whatever was said in about the last minute and a half. Sorry about that.
Just a glowing introduction about your long history in, working in the housing field. So Gene's been involved with Fannie Mae and with Home Ownership Preservation Foundation, and deeply involved with work on the Hill and with the administration about housing counseling issues in the past several years. That and hopefully people are familiar with his work and with HPF's work in this field, as well as the work with the coalition of HUD intermediaries, but all very valuable, and we coordinate closely on lots of the funding issues especially. So Gene, welcome.
Well, yeah, well, thank you. Thank you for inviting me to participate. And as Bruce and Matthew suggested, yeah, we have a good working relationship. We certainly try to coordinate our engagement with folks in the Congress, as well as, within the regulatory community and in the administration. And so, as a backdrop, the paper that was shared with all of you sort of came about primarily through my engagement with the Clinton team. And they had framed a housing agenda that, set the context for some of this work. Despite the election results, and talking to some of the folks who were on the Clinton economic team, they thought that many of these ideas are still applicable, and so we've kind of refreshed the document a bit to make it more generally appealing, hopefully. And of course, with these kind of working drafts, as we get more input, more clarity about who's going to be involved in the housing policy realm, we will customize it further. But I think there's some useful things there that, if anybody wants to take advantage of, you're welcome to, and that is the way the paper is structured was to highlight some of the promise that's offered by homeownership education and counseling. I know many of you are familiar with all the research studies and that, but in the context of with policymakers, a lot of times they need reminding of all of that. So it was suggested that I do a little summary of some of the key, research and findings as a way to help frame this, and then talk about some of the impediments to deploying housing counseling at scale. And the scale is critical because, frame this as trying to achieve an important housing goal, and that is to bring, in my framing, 1 million more home buyers to the marketplace, more sustainable home buyers to the marketplace, over the next 4 years. That has huge economic benefits for the nation. There have been numerous studies that point out that the housing recovery has lagged the economic recovery generally, and that if housing was back to a more reasonable share of economic activity, that would add as much as a point to GDP growth, which, if you've heard things coming out from the Treasury Secretary nominee Steve Mnuchin, he's talked about improving growth from its current, 2.5–3% range to a higher level, and certainly housing is one sector that, if it was, in a stronger position, would make a substantial contribution to that. So, and with that as backdrop, the Treasury nominee is someone who, I know there have been, a lot of commentary about his orientation, but I take some comfort in the fact that he has a pretty long background in the mortgage space. I was in Fannie Mae's capital markets group for many years, and Steve headed the mortgage trading desk at Goldman Sachs. And for whatever you want to say about Goldman Sachs, I mean, they were very savvy participants in the marketplace, and it does indicate a pretty deep understanding of how the system works. And so we're expecting that we will be able to work with the new Treasury team. A lot depends on the people who are nominated at the assistant secretary level, because they are going to be the ones who are more directly involved in executing strategy. But and that won't take shape except for over the next few months. But I do think that we will have some opportunities to work with the Treasury Department, as we have over the last 8 years under Obama, and even going back under President Bush. But in the paper, I talk about, in the third section, about some proposals that I am encouraging that policymakers consider in terms of leveraging housing counseling to advance the U.S. Housing policy. And within those proposals are some things directly related to Treasury, one of which is to maintain Treasury's sort of key role in housing finance. Prior to the crisis, Treasury did not play a particularly active role in housing, but prior to, in 2007, as the crisis was unfolding, Treasury was invited to take a much stronger role in housing, and HERA and other legislative vehicles established the parameters for TARP and for the creation within Treasury of the Office of Financial Stability, and the team that oversees MHA are all in that chain at Treasury. So we, from my perspective, was thinking that, and I do, with Mnuchin as the head of Treasury, I do, with his background in mortgages, I would expect that they would lean into, sustaining a stronger role in housing finance and in the evolution of housing finance, particularly as it relates to GSE reform. So that's probably a good thing, because Treasury can serve a very important catalytic role in getting industry and everybody else to pay attention to the issue and to coordinate efforts to bring all the pieces together that would have the biggest possible impact. So
so let me just jump in on that part right there. So this is good, and I'll have opportunities to go further. But so on GSE reform, so Fannie Mae and Freddie Mac, and as we all know, it's now owned by, or it's in conservatorship with the government. There's a lot of talk about privatizing, and there's a big concern about this duty to serve and affordable housing goals. So these are mechanisms whereby more low and moderate income and underserved markets get more attention through these programs, and there's a worry that these will disappear in a privatized solution. So any insights on that, and how the new administration might deal with this, or opportunities that creates?
Well, from the conversations I've had with with Republicans, has been that they did not expect GSE reform to be a front burner issue, at least not within the first couple of years. I think it was Michael Wright, who had been, who worked with Corker and who was very instrumental in pulling together the proposal,
Right.
legislative proposal, had suggested that 2019 would be the time when there would be a big effort in that regard. So Mnuchin has said that it's going to be a priority, but he hasn't said it would be a top priority, and I think he has a list of about 10 things. So whether that would supersede things like tax reform and so forth, I think it's rather doubtful, but it is on the agenda. It really has to be on the agenda, by 2018, 2019, because of the condition of the GSEs themselves. They're rapidly running out of capital. So that's the time frame that I hear most people talking about, is that we're looking at 2019. So in the meantime, we'll kind of be, muddling through with the current system for the next 2 years, which doesn't mean doesn't mean that we don't need to prepare, because there's going to be a lot of lead-up effort, prior to some action taking place.
Yeah, and I think the question is also how to build a coalition that could preserve some of the good things in there. And I think one of the ways to think about this is that there's not going to be any solution without Democratic votes, and the Progressive Caucus is very invested in this solution. Mm-hmm. So Elizabeth Warren and Sherrod Brown and people like that. So it's not like it's an easy ticket to ride. It's going to have to be worked out. Especially in the Senate. So that's a big issue.
And with Mike Crapo, resuming
yes, exactly.
leadership of the Senate Banking Committee, the thinking is that the Johnson-Crapo bill will probably be the template where they will start from. And so, there were some things in there that were, somewhat problematic to the progressives, but there was also some positive elements there. So, I would not be surprised if that is the starting place, and that refinements will, be done to that, hopefully to get to a point where, they can get 60 votes or whatever is needed to move it through the Senate. The House is another matter, of course.
Right. Okay, so keep going. Do you want to jump? Is it more you want to say on Treasury?
Well, yeah.
Do you want to move on? Yeah.
Well, yeah. Let me just finish up, with discussion of a couple of the other proposals there. One of which is to have Treasury to continue its role and to even take a firmer role in coordinating all the elements. In the paper, I have a little diagram, page 8, that talks about the spheres of impact, so all the things that could come together that could really, optimize an effort to use housing counseling, to help expand homeownership opportunities for a lot of folks who are currently not able to take advantage of that. But so that's Treasury's role. But then a key focus is really on FHA and FHA's authority. I know Ed Golding has talked about this in some other meetings, but we think that is a tremendous opportunity. It's a tremendous benefit for FHA to incorporate housing counseling more extensively in its origination as well as servicing practices. And particularly, and we found the message that really resonates with Republicans is that the health of the mortgage insurance fund is always a key issue. So framing things in the context of the benefits to the health of the fund, the health of FHA's risk management activities, really kind of resonates with them. So, we've been encouraging them to reconsider their authorizations, or if they need further authorizations, to try to get those through whatever means, so that they can employ housing counseling more directly, and that they can develop a structure to compensate for those services. Most of the risk in the housing market these days is migrating to FHA. So, they have a great rationale, justification, and need for more services that will help them mitigate those risks. And housing counseling has proven to be very effective in that regard. And so, I've teed up some ideas about how they would do that. So there's a risk mitigation piece, but then there's also the origination piece of it, and all of that, of course, requires funding. So, I've encouraged an increase in HUD funding up to $100 million. That would, half of that would go towards preparing, homeowners. The other would be devoted towards, other elements like, already on the housing counseling agenda, including a loss mitigation. But so there's FHA focus, and then beyond that, there's a broader focus on creating incentives to get industry to participate more significantly, in terms of funding housing counseling. So,
all of which very good. Go ahead.
Yeah, and those are, like Fannie Mae's Home Ready program, which we're working on with them, where they incorporate an incentive for borrowers who come through their programs to basically help cover the cost of counseling. So those are the kinds of incentives that should be encouraged, if not mandated, through a new system that will bring more of the financial industry on board with this process to bring more home buyers and to help them be successful. So that's the general direction of what I had laid out. So we'll see how that goes.
Well, and what's good, I think, is some of the things you really frame in a way that's somewhat easier for Republicans to hear, and that's I think it's a key issue here, the role of housing counseling and the impact on the home ownership on the economy, the sustainability, those kinds of issues are ones that resonate more and deeply with the target population. I think what happens at FHA is going to be very critical for all of us, because that's where largely lending is happening for people of color. And certainly the credit box is larger there as well, and these are critical issues for low and moderate income communities, critical for the urban populations, and I think we've got to really pay close attention to what happens in FHA, because I think there are people who are interested in making it much less valuable in the communities that we work in.
Yeah.
Do you have some thoughts about Ben Carson at HUD?
Yeah, well, I agree with Matt. That's been a rather mysterious process. Certainly, all indications are that he will accept the position, but there's been no further comment on it that I've seen in the last couple of days. So, but I suspect that what happens at HUD is going to really be driven at the below the secretary level. It's like, given his relatively limited background in housing, that he may set the overall themes, but that it will be the folks like the FHA commissioner, the folks at the assistant secretary level, who will be in very important positions to frame what they do. And so we're looking at, we know some people who are already engaged on the HUD, sort of transition team. You know, Sean over at Quicken is involved there, and there are a number of folks that have been discussed as even possible HUD secretaries who are deeply knowledgeable and experienced in housing, and so we're hoping that there will be roles for them, because these are people that we know and we can talk with and hopefully help them shape their agenda. Man, I think that's clearly what we're going to be trying to do over the next few months. And
well, I think this whole idea of home ownership as a major ambitious goal, because its role in the economy could appeal well. I mean, while it's clear that Ben Carson doesn't have a background in housing, it does also mean that it's a little bit more of an open door in terms of what the possibilities might be. And you know, a large ambitious goal like 1 million new homeowners and reaching out to communities that haven't been served well in the past, including rural, I think is key to all this. That becomes something that we could try to position early on in the administration, and then have some possibility of getting traction on.
That's right.
Create an opportunity.
If I could just add one comment to that.
Sure.
Yeah, I mean, no, you probably saw the paper that came out from the Center for American Progress when they were talking about the relationship between struggling housing markets and the election itself. And what they found was that a lot of the communities in Wisconsin and Michigan, and particularly Ohio, but that there, many communities are still struggling under the legacy of the housing crisis, as well as, economic difficulties. And so, there is some consistency between the level of struggle and the orientation of the voting patterns. And so, you're right. I mean, there's still, and I think this plays into the arguments for housing counseling quite well. Even New Jersey, with the new chair of the Appropriations Committee, New Jersey is one of those markets that has been struggling. And so the more people, recognize that, look, my community, has real deep difficulties here, and that policy, can be directed towards helping, these folks to recover. I think that's an important argument, a powerful argument for our work and our services. So I'm sure we'll be playing that theme quite a bit over the next several months.
Yeah, absolutely. I mean, it's interesting. So what CAP said, for this, people that might not have seen it, is basically that where the housing property values had not recovered, these were particularly strong areas in voting for Trump. And so I think making the Lincoln, Indiana was another one on the list, and Illinois.
That's right.
Yeah, but Illinois didn't carry. But so that's interesting. Yeah, I think that's a very valuable piece, and I think we're going to pay a lot of attention to rural issues as well, where there's certainly a robust presence of some housing counseling agencies in rural areas, and they've been struggling, and this would be an opportunity to elevate their work and maybe create some opportunities for populations that haven't always gotten the attention that could be useful for them.
Right.
So what's your read then on the appropriations process and issues on the Hill around funding housing counseling?
Well, yeah, as Matthew alluded to, I mean, we've got a challenging scenario right now, and in fact, I have heard just this week that the CR, they may be looking to develop a CR that goes through June, as opposed to just March. So that will create an even bigger sort of challenge over what happens this year, as you alluded to earlier, as to how this plays out in terms of potential NFMC funding and certainly HUD funding. So, So I don't know what to say about it. I mean, you know, we will be getting in there and educating our friends and others, you know, about the importance to fund housing counseling, and you know, but the resolution process is really unpredictable right now.
Well, that's discouraging to hear, because that could also delay the availability of what HUD funds get appropriated.
Yeah.
It's pushed back to June. I mean, they can
Yeah,
still
that would
move,
be.
they can identify it as an emergency, and have, in the past have been able to move some of that money ahead, but we don't know what the new HUD administration is interested in doing.
Yeah, that's just right now. There's so much uncertainty. Now, I would expect this to, you know, begin to clear up, you know, as soon as we get, you know, beyond the holidays and, you know, around the inauguration or whatever. But you know, right now, it's just hard to pinpoint, you know, when things are going to happen. Right, they were supposed to happen like now, but so much for that.
Mm-hmm. Gene, I'm just curious. Have you? I have not heard anything with regards to OMB, the Office of Management and Budget. Have you heard any rumors or anything about who might be heading that up?
Well, yeah, the rumor is that it would, you know, the most prominent rumor is that it would be Gary Cohn, who is another Goldman guy, who is, I think, the president of Goldman Sachs right now. So, you know, it could be a Goldman Sachs administration, possibly. That's the only name that I've heard a lot about recently. The thing is, the thing about folks, you know, at Goldman, I mean, they're very, you know, smart people generally. You know, they're from my experience with dealing with folks, you know, there's no shortage of capability there. You know, they're not particularly populist or anything, but they're, you know, smart. So you can have good constructive conversations with them. But that's the only name I've heard recently.
So one of the things that we traditionally did every November was to send a letter to OMB as part of the process of influencing the development of the budget. Since there's no idea who's going to be there, we haven't done that. But any thoughts about all that?
Well, as you suggest, right now we don't know, you know, who we would send that to. So I'm not sure that it would be, you know, valuable. Now, we should probably prepare one anyway, and so that it's ready to go as soon as it, you know, we're fairly clear on who's going to be in charge there. But you know, that may not. It sounds like that, you know, they will really get involved in the budgeting process, you know, right after the inauguration, and so, which is end of January. So that's a pretty tight window if they are going to get anything done in March, and that may be why they're thinking, well, this is just not going to happen that fast.
Well, I mean, the problem is we're talking about two processes, right? We're talking about the 2017 budget, but then they also have to start the 2018 budget.
Right. Right.
And those would be. I mean, it's a lot to do, and they'll be running parallel. Right? Crazy.
Yeah.
Well, let me. So anyway,
this is a tough one.
Continue puzzling through that. So here's another kind of big theme I think we've all been talking about, but worth putting on the table, which is this idea that how do you move home ownership dramatically forward, and obviously housing counseling is a component. The other one is this idea of expanding the use of down payment assistance and having it tied to housing counseling, and that there's this huge interest in the new administration about infrastructure, getting housing to be identified as part of that, which apparently there is some possibility that that can happen. And then seeing if the infrastructure conversation can include down payment assistance with a housing counseling component.
Yeah, absolutely. That was a key feature of the Clinton infrastructure, investment plan, was expanded down payment assistance programs. And, I don't see why it wouldn't be applicable to the infrastructure plan that so far has been kicked around by the Trump administration. Actually, there are some similarities in it. One of the major sort of differences, is the fact that, with the Trump plan is more oriented towards tax incentives and reductions, whereas the Clinton plan was more focused just on, cash funding. Yeah, I think that's a part of the solution or a contribution towards getting the housing economy back humming again and expanding opportunities for a lot of folks that, helped Trump get elected. So I think, yeah, that's an important piece of the conversation.
Yeah, and obviously if it's tax incentives, down payment assistance doesn't become part of it, but I think there's a lot of talk that tax incentives won't really produce that much new money. It'll simply drain money from other accounts, and they'll need to figure out how to get new money in, and maybe this jiggling of the mortgage deduction, and maybe an opportunity to do some of that.
Yeah, you're absolutely right. But there is talk about some infrastructure spending. So within that, I think we will certainly try to make our case that a part of that should be directed towards the housing market, and so re-energizing the housing market. And
absolutely,
that's a good way to spend some money. So.
Yeah, right. No, and it's right. And the question is sort of where can we have access, and how do we actually position this? I think some of the things, your paper, we'll probably develop some paper as well, but I think it's partly working through some of the friends we have on the Hill who might have influence with some relationships we have, as you said, like the bipartisan conference, which strongly endorsed housing counseling, had a really good piece to that, and hopefully they will be influential in some of the HUD nominations as well. But thinking about those places where we can get these ideas put into the system, and not just from us but from other places. MBA may be interested, the realtors may be interested in some of these ideas as well, home builders.
Absolutely. Yeah, I think anything that helps to expand the housing market in a way that's beneficial for everybody, we should have plenty of friends in regard to that. So yeah, I look forward to working with you and Matthew and anybody else out there who wants to, move that forward. And I expect we all do, because again, it sets a much stronger context for our work. And so, we'll just have to get at it. But anytime you have a change in administration, there's just a lot of, engaging and relationship development that goes on. And so I expect we'll be doing that over the next several months.
Sounds right. Well, thank you very much, Gene. Helpful. We'll stay in touch on all these issues. A lot of interest and concern in our community about all this. So thank you for that. And
Thank you.
See if we can get good. Let's see if we can get Ellie and Judy on. So one of our ideas here is to expand the role that or have more attention paid on rural housing issues. That it's we knew, I guess, that in the House and Senate the Republican base is much more rurally based, and we think that the Trump administration will be more interested in this. We think that HUD, if Ben Carson is the leader, will be more interested. So I'm wondering, so have Judy and Ellie, are you connected yet? Do we have you?
It's Judy.
Oh, good.
This is Ellie.
Hey,
I'm here.
Judy. Oh, excellent. Good. All right. So let me, why don't you just, Ellie and Judy, do you want to just give us your thoughts about what the opportunity might be, and then I can talk a little bit about what we might do with how we might structure a task force?
Go ahead, Judy.
Ellie, do you want to? Okay.
Do you want to go first,
Judy, you want to go
Ellie?
ahead?
No, go ahead, Judy. Okay. Well, I think it bears looking into. You know, we have you know, all of our agencies that we fund as an intermediary all do work in rural areas. Some of them are located in rural areas, some are in urban areas and do significant work in surrounding rural areas. And there's definitely, you know, big differences between, you know, urban and rural, and then there's no real consistency even among rural areas. You know, there are geographical difference, economic differences. But if there's a way to kind of tap into the value that counseling can bring to rural areas, you know, especially around economic development and housing, I think we can add to the conversation.
And I'll just point out that we just before this call put out a little notice about this issue, and we've got 9 people who have already signed up to be part of the task force. So please check your email if this is an area you're interested in. So Ellie, what would you like to add to this?
It's interesting, you know, because I took part in a Federal Reserve Bank webinar back in May about rural housing, and so I was just kind of looking through that before this call, and some interesting things that popped out at me that I thought might be useful to think about when we're talking, particularly with this upcoming administration. There's been some significant consolidation of the smaller rural banks, and so all those, you know, small family-owned banks, they just aren't able to be profitable under the new regulations because of the cost of implementing them. That has left a lot of rural home buyers with limited options for where they can get their mortgage. So I think that that's a conversation to have. I mean, I think that that would touch some of the things that this administration has been talking about with regulations. So that, you know, the kind of really important to really look at partnerships. So that's great that this is starting to happen here. The rural areas are the most persistently poor areas in the country, and that 30% of the people who are poor in rural areas have been poor for 30 or more years. Something else that I think would touch this administration is that 18% of the of the rural population are age 65 or older, and you know, many of these are in retirement communities, and there's otherwise persistent population loss in the rural areas. There's 79% are mostly white, non-Hispanic, but the minority population is growing, and depends upon where you're looking, very much like what Judy said, that it's different everywhere. And the growth of the Hispanic population in the rural areas is the fastest growing, and is not any longer related simply to migration, but it's rather part of a natural growth process. And although, and this is again something that I think talks to some of the things that the Trump administration was able to really get some traction on, is that although unemployment, the gross domestic product, and the housing prices have improved overall for communities where there's a small economy, the unemployment and home prices have improved, but the job growth and the gross domestic product have been flat and have actually declined in 47% of the small county economies. So just you know, a couple of things that I think makes it easier to talk about the issues around rural home ownership and rural affordable housing in general, whether it's a rental or home ownership. So I think that this is the perfect time. We'd already been kind of talking about really trying to focus more on what's going on in the rural market, and so this kind of makes it a perfect time, perfect storm.
Perfect storm, right? Unfortunately. Well, that's a good point. And just looking at where people have signed up who are the first early adopters of joining the task force, we have Georgia, California, Virginia, Wyoming, Ohio, Kentucky, West Virginia, Florida, another West Virginia. So, you know, a nice spread. But plenty of room for more people to join. And the idea is we set up a SurveyMonkey. If you don't see it in your feed, just put in rural, and that was part of the name of the title, and you should be able to find it quickly. And you can join the task force there. Really, all you're doing is signing up. We'll schedule some phone calls and really kind of brainstorm about what could the issues be, what could we present, and to whom on how housing counseling and rural housing issues could work together. And we'll be very interested in having a broad spectrum. As Judy said, there's kind of a broad range of the kinds of issues that affect rural areas. But maybe there's some things that cut across for everybody, or maybe it's that we have few distinct themes that speak to different areas. But the whole idea is let's get some ideas out there and thinking about it. I do think that this down payment assistance issue will be a valuable one for rural areas as well as urban areas. And it's good to kind of have that as a special emphasis, but not the only emphasis, because it makes the case for making it available for everybody if there's greater buy-in from rural areas. And there may be other things like that we should be thinking about. So, Judy, Ellie, any more thoughts on this?
Well, if you're looking at some other ideas, I mean, I think things to be looking at are land contracts. They're really a rural home ownership issue. In New York, anyway, we're seeing that. And housing counseling can really play a big part in that, in educating people who are looking at getting into those kind of contracts.
You want to do a quick sentence explanation on land contracts to make sure everybody knows about it?
Well, essentially it means that the land contract buyer will not receive a deed until the end of the contract term. So essentially it's a private interaction with an owner who is saying, you can pay me and we'll do it over a period of time, and you're actually kind of a renter for the period of time of the contract. And then at the end of the term, once you've paid everything on time over the term, then you become the owner of the property, and it becomes a quagmire for a lot of people. Obviously, if they don't get all the way through, they get maybe halfway through, a 20-year term and then can't pay anymore. They lose out all of their benefits and money that they've put into the property. That was more than one sentence. I'm sorry.
Well, it's a good point, and one of the things that we're finding a shortage of are lower valued mortgages. So mortgages. I mean, we used to say 50,000 it was the cutoff, but now I'm hearing that in some markets it's hard to find mortgages under 100,000, and land contracts become the substitute for that. So it's a business model of its own, which has its problems, but also there might be a market gap, which we think is really problematic. And bakers are saying they can't make enough money on a $100,000 mortgage, and we want to encourage them to think about sharing the costs throughout the system so that it's not penalizing lower cost properties, which are often more for low and moderate income buyers. But I mean, those are the kind of issues that are worth bringing up and thinking about how they affect many markets. Good one.
Well, and the other big rural issue, of course, is manufactured housing. I mean, manufactured housing makes up 6 to 7% of the occupied housing nationwide, but it makes up 16 to 17% of the occupied housing in rural areas. This is according to the Federal Reserve Bank. And in many states, New York, where I am, being one of them, you can't get a mortgage loan to get manufactured housing. You have to take out chattel, which has little to no protection. So that was also something that was that was an item in the duty to serve proposed rule that the FHFA asked for some comment on. So it's another area that I think that housing counseling can step into.
Excellent. Yeah. I think that these are all kind of ripe areas, and I'm sure people have other ones as well. There is if you do sign up for the task force, there's a little box that you can fill in if you've got some suggestions. You don't feel like you have to fill that one in. That one's not required to be filled in, but if you've got some thoughts about things you'd like to add to the list, that's great. It helps me think a little bit about the agenda before we get started. But listen, thank you both for being engaged in this issue. I know you both will have a good leadership role in helping shape the conversation on these issues as we go forward. So we plan to have another call in December, and we'll hopefully have more knowledge about what the administration is looking like and some of our plans for 2017 by then. And we'll be very interested in talking with everybody about that. We're planning on a national meeting for our Leaders in Housing Counseling Conference, and probably the first week of March, working on logistics and dates and opportunities. But the idea would be to try to do something early that addresses both the issues of private stakeholders in our that we work with, so lenders and investors, and the financial services industry, as well as seeing if we could engage at all with the new administration and with HUD. So should be very interesting, and we'll keep you informed about dates and all that, and hopefully have some better ideas of that. If not by the next call, certainly early January. One more thing just to put on the list is that please thank you everybody. We have had a good year in terms of memberships. I know it's been a hard year for housing counseling, and people have really stepped up, and we have I should put a list together of all the new organizations that joined National Housing Resource Center this year, but we have a bunch of new groups that joined, and a very good renewal rate, so this has all been helpful. We appreciate that support, and please think about putting us in your 2017 budget if you're not there already, and also plan on a trip. So the location for the meeting that we're going to do in March will be in DC. Oh, what we didn't talk about was the Cleveland meeting. Maybe we'll talk a little bit about that for the next call. But we did our first MBA Realtors meeting in Cleveland. Big shout out to NHS of Cleveland for hosting, ESOP for having a strong leadership role. We had a number of groups involved, and big involvement by MBA, the Ohio MBA, and the Realtors. They pulled together with the idea of how they can use housing counseling more effectively, and they're going to schedule some events, homebuyer events and educational events for lenders and real estate agents. So a lot of good stuff came out of it. We're working with the MBA about trying to schedule 3 more of these events around the country, and we'll probably do in June a big homeownership month event, and kind of use that to kick off a new round of these for the following year that will hit more cities and improve the working relationships. But all kind of feeds into the good work you all are doing out in the field. We really appreciate all the support and involvement you've shown, and we'll stay in touch. Talk to you in 2 weeks. Thanks. Bye.